The Bank of England calls on banks to help avoid another credit crunch. Economic woes are affecting demand for asset finance facilities, and the areas and sectors in the UK that are using CBILS and bounce back loans. All of this in the latest Business Finance Bulletin. In a previous bulletin, I mentioned that I got concerns that we may be seeing another credit crunch in the tail end of this year and certainly in 2021. Well, it seems that the Bank of England also have similar concerns. Now, one of the many committees the Bank of England has is the Financial Policy Committee. Now, that committee's responsibility is to monitor and oversee risks that the UK economy could face. And the latest committee report has suggested that they are concerned that the banks may not be there to meet the cash requirements of UK businesses. Now, the committee estimates that there's probably going to be about a £200 billion demand for finance as businesses come out of lockdown and start growing again. Now, the concern is that the banks may not be there to meet that demand. Now, the committee recognises that the banks have done extremely well in supporting businesses before and during lockdown, with an estimated £70 billion of net borrowing distributed. Net borrowing meaning new money's out, less money's paid back. And so that's a huge slug of money, primarily sourced via CBILS and bounce back loans. However, with this £200 billion gap, the Bank of England wants to make sure that the banks are there to meet that demand. They are concerned that with insolvencies going to be on the increase, the banks are going to be faced with even bigger losses and therefore will contract, will step back away from the market in order to conserve their capital. And obviously the Bank of England doesn't want that. So clearly it's making an early call to banks to say, hey banks, we're watching you. We want you to be out there supporting UK businesses in 2021. But of course there are alternative sources of finance, and one thing that popped up last week, IWOCA, the alternative cash flow lender, has tapped into £100 billion of funding, and it's actually gone to all of the UK banks and said, hey, if you're not happy to support your clients, refer them over to us. So we can see that the alternative finance sector is already kind of stepping into the gap that perhaps may be left by the banks. So interesting developments. So watch this space in order to make sure that you are ahead of the game when it comes to raising finance. Let's move on now to demand for finance, and interesting figures out from the Finance and Leasing Association. Its members are responsible for issuing facilities such as HP and leasing to finance the purchase of capital items and machinery. Now the figures are out for June 2020. Now in the month of June 2020 compared to the month of June 2019, the total volumes of business written by that sector were down by 41%. That just shows how big the change in the market has been. If we look at the first 6 months of 2020 versus the first 6 months of 2019, there the drop in the volume of business was down by 32%. But if we look at the last quarter, quarter 2 2020 versus quarter 2 2019, there the drop has been a massive 49% in terms of volumes of business written. Yes, nearly 50% drop. Now what's driving this? Well, there's two things. First of all, it's lack of investment appetite amongst businesses. Many of them are very cautious at the moment, sitting back and watching the market and really don't want to commit to any capital expenditure at the moment. However, on the other side, we've also got the fact that many businesses do want to invest, and instead of obtaining finance, have said that they are going to use funds released via bounce back loans and CBILS loans. Yet they're going to use cash instead of using finance facilities. So two things at play here. Let's close this week's bulletin with our usual look at what's going on in the CBILS and bounce back loan market. Now, before I take my usual look at the number of facilities drawn, I want to review a report issued by the British Business Bank, which focuses on areas and also sectors that have accessed these government loan support schemes. First of all, CBILS loans. Now, outside of London and the southeast, where many of businesses are based, it's businesses based in the east of England that have taken out the most CBILS loans. In terms of bounce back loans, again, again, excluding London and the South East, it's businesses based in the North West who have taken out the largest number of bounce back loans. If we look across the UK in terms of where businesses are registered and who's accessed loans, it's quite evenly spread and the numbers kind of match each other. So it's good to see a good even spread of businesses accessing support. Now, in terms of what's going on in the scheme, well, the figures to the 2nd of August have been released, and in total the amount accessed via the scheme now stands at £50.7 billion. So how does this break down? Well, in terms of bounce back loans, the number of loans distributed, those stand at 1,135,575 with £34.3 billion issued, and that's an approval rate of 82%. In terms of CBILS loans, well, the number of loans distributed there, that stands at 58,595 with £13.1 billion issued with an approval rate of 49%, a slight dip on the kind of average of 50%. So again, many businesses still struggling to access CBILS. Well, as I've mentioned all of the time, over the whole period when these CBILS loans have been coming out with very low acceptance rates, don't forget there are many alternative providers out there who can step into that funding gap and help you out. So we can see lots of businesses still accessing these schemes, but don't forget the CBILS loans ends at the end of September. So if you're thinking of applying, you need to get in quick. Well, that's it for another bulletin, and as ever, I hope you enjoyed watching, and if you did, please don't forget to subscribe to this channel and also give it a like and a share. So that's it. Look forward to being with you again next time, and in the meantime, have a great, successful, profitable and safe week.